everyone. Hello.
Hi.
Hi.
Hi, everyone. How are
Hello.
you? Hi, hi, hi.
Hi. How are
How are
you?
you? Hi, Sarah. Hi, Karen. Okay, so I think just checking how many people we are here. Okay, there are 19 people. Okay. Okay, so I'm gonna start right away. So apologies first for the delay. We had a small technical issue because all our trainings are currently online and there was somebody else on the channel. Hope you're doing well. So for those who were not here last time, so because this is the second session we're doing, basically an introduction to finance. I think most of you are, if not all of you, are startup founders and are getting accustomed with the basic concepts in finance. So I'm gonna start by sharing my screen. But before doing that, let me like review very quickly what we did, or tell you very quickly for those who are not with us last week. So first, just let me know everybody's hearing me. Can you write in the chat box if you can hear me? I know you're all muted. Okay. Okay, great. Great. Okay.
Hello. Sorry, just a question.
Yeah.
We have an extra team member our social enterprise. Can we add him?
You mean to the session?
Yes.
I think you can. Can you just make sure to send him or her the link on which you clicked?
I sent him at mobile. Yalla. Okay, thank you.
Okay, you're welcome. So what startup are you? Just tell me. And what's your name? Just for me to know to whom I'm talking.
Yes, my name is Karen. My partner Sarah here also. هي هون.
Okay.
Our startup is خبز وملح.
خبز وملح. And what do you do?
We are a local exchange program ضد الطائفية بلبنان. So بتخلي عالم من مناطق مثلا الشوف تروح تعيش عند عالم بالجنوب وعالم بالجنوب تعيش عند هذا لفترة قصيرة وبنعمل لهم وبنعمل whole plan يعني لإلهم.
Okay, very good.
So
طيب أنا Okay. Sorry, it's cutting a bit, so ما سمعت على الآخر. قلتي لي بنعمل لهم a whole plan.
إنه هي الفاميلي اللي حتستقبلهم. It's like بيكون في عائلة وهي بتستقبل حدا وبتكون عملت لها whole touristic plan ومدخلين فيها كتير agri tourism إنه أشياء خاصة بالزراعة وأشياء خاصة بتراديشنز قديمة بلبنان وهيك.
Okay, very good. I'll have a chance to discuss it with you probably in the group coaching session where we'll talk about the revenue model and how you're thinking you're going to make money and what you're charging for and all this, okay?
Great, I'm so excited. Let's go.
Okay, great. So, okay, what we did last time, على السريع, just in a 30-second summary, we talked about the importance of having what we call a revenue model for your startup. So basically having a clear strategy regarding how you're going to charge for the products or services you're offering and what you're going to be charging for. So this was like half of the session. And then the second half, we spent it talking about the first financial statement, which is the income statement, what is also called the profit and loss statement, where we see basically a summary of the operations of a company, how much it's making in revenues, how much it's making in how much it's earning, and the resulting net income or profit. And in case it's negative, this would be a loss. We went into the details of this. Today, I'm going to present two other sheets and these basic financial statements. I mean, the basics, I want you to understand these, but the ultimate objective for all of you would be to eventually build a simple or a more complex, depending on what you want and your needs, financial model for many reasons. So the financial model would be first, it's a key component of your business plan as a startup. Second, while you're building it, you would understand what are the drivers of your revenues and your expenses and how the whole machine or the whole engine is put together, and what you can influence, what you can increase, what you can decrease, what are the things that are under your control, what are the things that are not under your control. So it would give you basically a granular visibility on how things are in your company. Sorry, في حدا عم يحكي؟ Okay. So yeah, eventually the objective is to have a financial model, okay? بس هلا today بعدنا شوي in theory, just to make sure we're all on the same page. Last time I asked you if we did a 2-hour session this time, and you told me you'd prefer us to have a 1.5 hour, and there's more material if there's a possibility of scheduling a third session to go into the details. Again, there will be a group coaching session or maybe a couple of group coaching sessions depending on your number, and then we'll discuss this in detail and in each particular case. So now down to the balance sheet. The balance sheet, so does anyone know what's a balance sheet and why, I mean, what purpose it serves?
I think it's the sheet that reflects where the company stands when speaking about money. So if it's having أكتر assets أو أكتر liabilities, just to balance شو عنده وشو عليه.
Okay, correct. So basically, what you said is correct. So the balance sheet is what we call a statement of financial position. Okay, it reveals what the company has as assets, and assets means what the company owns. Okay, and it also shows in front of these assets how these things that the company owns were acquired. So the sources, was it because of debt, or was it because of equity? Okay, we're getting into the details of this in a second. Okay, so this is the format of a balance sheet. So basically, we have assets on one side, and we have what we call liability and equity on the other side. Okay, so assets are everything the company owns. So let me just simplify this for you, and let's just make an analogy between a company and any one of you. So let's say we're talking about an entrepreneur who has in terms of, as a person, who has as you know, as assets a total of, let's say, $10,000, including the money they have in cash, their car, maybe land they own. Let's assume this is what they have. Okay, so these would be the assets. The assets would be everything somebody owns. Okay, be it a car, be it a cash position, be it an apartment, a piece of land, anything that is owned by a person. These would be the assets. Okay, they would total a certain amount. Okay, let's say it's $10,000. The liabilities and the equity would basically tell us how these $10,000 were built, so how they came to life. So if, for example, this person actually borrowed, let's say, half of this money from their friends, so 5,000 out of these 10,000 would be what we call liabilities. Okay, and let's say the remaining 5,000 were what the person owned in the first place. Okay, like, or it was its own money. So this is what we call shareholders' equity. So the whole idea is that the total of assets is always equal to the sum of liabilities and equity, because basically assets are essentially either coming from liabilities, so from a debt that the person has. So think of liabilities as debt. Okay, I'm going to explain what's the difference between current assets and non-current assets, and current liabilities and non-current liabilities. But for now, let's think of assets, liabilities, and shareholders' equity. Shareholders' equity is any money you put from yourself. Okay, your own money. Okay, so in the case of a company, you need to put some what we call capital or common stock. Okay, and this is what we call shareholders' equity. So if you're going to start a company, let's say, and you have in your pocket 5,000, you're going to be putting this $5,000. You're going to be putting this as shareholders' equity in the company. On the other side of the balance sheet, there would be $5,000 left in cash. The idea of a balance sheet is that, as the name implies, it always balances. So total assets are always equal to total liabilities and equity. Okay. So I'm just going to explain a small concept that is sometimes a bit difficult for people to understand, but so it's actually this thing that we see here on this slide. If you look at shareholders' equity, it's usually the sum of what we call common shares and retained earnings. What does this mean? It means that, in summary, this shareholders' equity is the sum of whatever you have put as initial capital in the business. Think of this as common shares. And retained earnings is basically the portion of the profit you make that you decide to keep in the company. Okay, last time I explained in the income statement that once a company makes income, so there is a net income, there is a part of this net income that the founders can decide to cash, to take. And this part is called dividends. The other part, so think of net income as the total. Part of this is dividends. Let's say I take a dividend of 20% of my net income. If my net income is $100 and I took $20, the remaining 80, what we call retained earnings, it's money that I made as profit, but that I decided to keep in the company, basically in the vision of growing the company. So it's like a reinvestment in the company, knowing that I have actually cashed the part I decided to cash in dividends. Okay. So how does this work? So at the beginning of the business, okay, we start with shareholders' equity being equal to whatever you invested in the company. So we start the business, I invested 5,000. So the shareholders' equity is equal to the share capital, which is, let's say in this case, I put 20,000, the shared capital plus retained earnings that are in this case 0 because the company has not made any profit yet. Okay. With time, this will change. Okay. Why? Because with time, I will have retained earnings, which is here it says net income, but in reality, it's the part of net income that was not distributed as dividends. And then shared capital plus retained earnings every time is what we call shareholders' equity. Okay. So, and this shareholders' equity, just to put things in perspective, is this thing at the lower right side of the balance sheet. So it's, if you want, the half in illustrative terms, half of the right-hand side, not necessarily in value term, but the idea is that on the right-hand side of the balance sheet, we always have liabilities and shareholders' equity. Just a small note about current versus non-current. You see that assets are split between current assets and non-current assets, and liabilities are split between current liabilities and non-current liabilities. The idea here is the following. Anything that can be converted to cash, okay, or used in the business, or actually utilized within 1 year is put under current. Anything further than 1 year is put under non-current. So, for example, cash, you know what cash is. Inventory is an important, I'm starting with each one of the items on the left. So inventory is what you own as a company as stock. Let's say you sell phones and you have a stock of 100 phones, and every phone costs you to buy it, you as a business, let's say $100, okay, or $1,000 to make it easier. So you have an inventory of $100,000. And inventory is expected to be sold, or you know, there needs to be a turnover within a year. That's why it's actually classified under current assets. Accounts receivable are basically what you have, what your customers owe you. So this is like in simplified, if you sold something to a customer and you gave them a payment facility, okay? So payment terms, you told them, don't pay me today, pay me in 3 months. So this amount, let's say you made a sale of $1,000, but you didn't cash the money right away. This $1,000 would fall under accounts receivable, okay? And they're supposed to be converted to cash within a year, which means that if the payment term is 3 months, within 3 months, the customer is supposed to be paying you back this amount. Okay, so this is as far as current, the three main items under current assets are these ones: cash, inventory, accounts receivable. There are others, but these are the main ones. As for non-current assets, usually we classify under this everything. Okay, so non-current assets is everything that needs more than a year to be actually converted to cash. It includes what we call property, plant, and equipment. It's actually abbreviated as PPE. Anything related to technology, patents, or trademarks. Okay, I'll explain each one on its own. So just for you to understand, non-current assets are usually split in, there are two types basically of non-current assets. There are tangible non-current assets and intangible non-current assets. What does it mean? It's self-explanatory. Everything tangible is everything you can touch, you can see. So if I tell you property and I have a building, you can see that building. You can actually see it with your eyes, okay? So this is a tangible non-current asset. Same for plant and equipment. Plant and equipment refers to anything you might own as a company, as cars, as machinery, as you know, a production machine, anything like this is basically plant and equipment, and it also falls under tangible. Okay, technology here it could be either under tangible or intangible depending to what it refers to. So if we're talking about let's say an app, an application, we might think it's more like tangible, okay, although we can't touch it, but it exists. Okay, but on the other hand, patents and trademarks both fall under what we call intangible non-current assets. What does it mean? It means we cannot touch them, they don't have a physical form. What are patents and trademarks, in case you don't know? So a patent is basically something you apply to, and it kind of exclusivity over what you are actually inventing in terms of innovation or in terms of product or in terms of process. This is basically, you apply for a patent, usually at the national or international level. And once you get this patent, you have exclusivity over, over this thing that you applied for, be it your product or your technology. Okay, and you usually pay for a patent. And typically patents last for like 20 years or something like this. And trademarks are very close to patents in the definition and in what they represent. Okay, and you usually pay for these, and this is why we record them under non-current assets with their value, because they are worth something. So let's say you have a patent for a certain product or something, it means that your company has an additional asset, which is a patent. So in case you decide to sell your company, you're also selling the patent, which gives it more value. Okay, so this is as far as assets are concerned. So is it clear, like for you, what's the difference between current and non-current assets? Just write me in the chat box. Do you have any question? Can you hear me, guys? Okay, all clear. Clear. Okay. Okay, great. Okay. So, okay, I explained this. So the balance sheet, as I said, always has to balance. So assets are always equal to liabilities and equity. And why this happens? I mean, why is the balance sheet always balanced? Because of some principle in accounting that is called double entry accounting. Okay, what does it consist of? Basically, you have two options. So think of the balance sheet as two columns, okay? And it's always balanced because we are always in one of these two scenarios. We are either adding or deducting the same amount from both sides, okay? So in the first case, we're saying we're recording the transaction on both sides of the balance sheet. So if, for example, you took, let's say you repaid a debt, you repaid a certain debt. So basically you have to basically you have an outflow of cash to repay this debt. So you have minus 100. Okay, everything that is between parentheses means it's a minus. But then you repaid the debt, so the amount of the debt decreased by 100, which is this amount that you paid in cash. So it's basically a minus 100 on both sides of the balance sheet. This is obviously an example, and it could be the other way around, and it could work the same way. So if, for example, I go to the bank, I get a debt, so the debt would increase, let's say, by 100, and the cash would increase by 100. Just a small clarification in case I didn't make it on that slide. So, same liabilities. So current liabilities are any liabilities, so any debts that you are expected to repay within a year. And the main actually account under current liabilities is called accounts payable. And what are accounts payable? It's actually the opposite of accounts receivable. Accounts receivable are money that your customers owe you, and accounts payable are actually money that you owe to your supplier. Okay, so if, for example, you are importing a product from China and then selling this product, and then you got the product to your shop, but then the seller in China gave you a 3-month period to pay for these products, you put the amount that you need to pay to your supplier on accounts payable. And typically, what we encourage businesses to do is basically to have, if you want, long cycles. What does this mean? We encourage them to give their customers short payment terms. So I give my customers, let's say, 1 month to repay me. Okay, a payment facility of 1 month. So this is for accounts receivable. But I ask my supplier, okay, to give me 3 months to repay them. And this falls under what we call the cash flow cycle. And this would keep cash in the company for longer. So if the customer is paying me 1 month after I sold him something, but I have 3 months to repay my supplier, this would give me more cash as a company. Okay, and non-current liabilities are basically any debts that you have that are to be paid after 1 year. Okay, so to give you an example, let's say you take a loan from a bank and the whole amount of the loan has to be repaid in 5 years. How do you classify this here on the balance sheet? Everything that you have to repay within 1 year, you put it under current liabilities, not under accounts payable. You open another line and you call it, for example, short-term debt, because it needs to be repaid within a year. And the amount of the debt that needs to be repaid in, let's say, the remaining 4 years would be classified under non-current liabilities. Okay, so to go back to this, why a balance sheet is always balanced? Because there is this principle that is called double entry accounting. So it has two options. Either we record the transaction on both sides of the balance sheet, so we add or we deduct the same amount from both sides. The second scenario is basically we record the transaction twice on the same side of the balance sheet. So I would be entering a positive and a negative number on the same side. So let's say, for example, I had to pay $100, which is the second example, to buy a piece of equipment. Let's say I'm buying, I don't know, a machine for my plant. And this equipment cost me $100. So I have to disburse 100 in cash. So it's a minus 100. This is why the 100 is between parentheses. And the equipment, so I would be gaining an asset, which is the equipment itself, which is worth 100. So basically I removed 100 and then I added 100. So the balance sheet is always balanced. Okay. So this is why basically any transaction involves two accounts on the balance sheet. Either these two accounts are on both sides of the balance sheet. Okay. So I'd be adding or deducting the same amount from both sides. Or in case they are on the same side of the balance sheet, these two accounts, I'd be adding and deducting the same, the same amount. So it's a plus and a minus on the same side. So to give you an example, let's say, I'm just thinking of an example on the other side of the balance sheet. Non-current, okay, it always has to have something on the right. It's usually what happens usually in the second option usually happens on the left hand side of the balance sheet. Okay, so I explained to you the difference between accounts receivable and accounts payable. So the accounts receivable are amounts owed. It's supposed to be not owned but owed. Okay, they're owed by customers to the company. So it's an amount that your customer owes you as a company. So your customer bought something from you and you give them a certain payment facility. Okay, the accounts payable are the other way around of the same principle. So basically they're the amounts that you owe to your suppliers. Okay, so you bought something but you have not paid for it yet, and you put it under accounts payable. And if your customer bought something and they did not pay for it yet, you classify it under accounts receivable. Okay, so just to take an example, how would the balance sheet look different if the company bought inventory for 60 on credit rather than cash? So let's say the company, okay, bought inventory, so it bought stocks for $60 on credit, not in cash. What does this mean? It means that it bought the inventory, so the inventory, okay, so here we have two transactions. Okay, maybe let me just explain one example at a time. No, so we have actually two transactions happening on this balance sheet. So we have the company buying inventory for 60 on credit. So how do we record this? The inventory has to increase by 60. That's why we have the first 60. But because it's on credit, its accounts payable are actually also increasing by 60. Hence the 60 you see on the right-hand side. So this is the first transaction. So I bought inventory as a company. Okay, I got stocks of products I want to sell. So I got the stocks. So I have an inventory in the company worth $60. This is the first 60 you see next to inventory. We're gonna talk about the second 60 in a second. And facing these 60 in inventory, I have 60 in accounts payable because I have not paid yet to my suppliers. This comes from the on credit. Okay, and then I sold all the inventory for $90 on credit rather than for cash. So I sold the inventory. What does this mean? So the 60 in inventory like decreased. Okay, so I have the minus 60 next to it, but I sold it, okay, for 90 on credit. So basically my customers owe me 90, right? This is why I put 90 next to accounts receivable. Okay, and how do I balance it on the second, on the other side of the balance sheet? So the accounts receivable are basically a sale that I made to my customer. That's why I put it under revenue. So we see on the right-hand side of the balance sheet under shareholders' equity, two lines, okay? The common stock line that has nothing to do with this transaction, and the second line, which is the retained earnings. Think of retained earnings as, if you want, the net income. So the result of the difference between your revenues and your sales, okay? So the retained earnings, the amount that is next to retained earnings, is the result of any operation that happens below it. I sold basically the inventory for 90. So I have recorded 90 in accounts receivable because I sold the inventory on credit. So I made a sale in front of it worth 90. So the 90 on the left is balanced by the sale the revenues basically, or the sales, revenues and sales mean the same thing, on the right. And then the inventory decreased by 60. So I have the cost of sales that is 60, which comes below the 90. Okay, and the difference between the revenues and the sales is 30. Okay, is 30. If I add this 30 to the 60 of accounts payable that I have on the top, I'll have a total of 90 on the right, which actually matches the 90 of accounts receivable, or the total of the net on the left hand side, which is 90 plus 60 minus 60 of inventory. Okay, it sounds tricky, but it's not. You actually just have to take it step by step. So again, to recap, I bought inventory for 60. So I add the amount of inventory by 60, but I bought it on credit, not.
Joelle, sorry to interrupt. Can you use your mouse when you're on the screen when you're using the numbers, so we can see them directly?
Yes, definitely.
Yes.
Definitely. Sure, okay. Okay, can you hear me?
Yes, thank you so much.
Yeah, sure. Does anyone have another question? Because I heard the voice of a gentleman. Okay, so I'm going to use the mouse to make it easier. So the first step is we bought inventory for 60. Okay, so I add 60 next to inventory on the left. Okay, so someone is talking to me on the chat. What do you mean by cost of sales? Okay, cost of sales is what I explained last time. It's what we call cost of goods sold. So on the income statement, the second line after we have recorded what we have made in sales or revenues is actually the amount of these sales in cost. So let's say I sold stuff worth $1,000, but these things cost me to buy them $700. This is cost of sales. So let's say I buy items from China and they cost me $700. And then I sell these items that cost me $700. I sell them at $1,000. So I record on the income statement, the first line would be $1,000 in sales. And the line after it would be the cost of these sales, which is the 700. And the difference between the two, okay, thank you, got it, perfect. So back to this. So we bought inventory for 60 on credit. So we add 60 next to inventory because inventory increased by 60. Okay, this is the first step. But I bought it on credit. What does it mean? It means I didn't pay for it in cash. Okay, had I paid for it in cash, I would put plus 60 next to inventory and minus 60 next to cash, and this would balance directly on the left. But I actually paid on credit, which means I have an account payable of 60. So I add the 60 on the other side of the balance sheet. So you have 60 here. Okay, let me highlight this in yellow so that you see it. So I have 60 here, and this matches the 60 here. Okay, this is the first step. Then I sold all the inventory for 90 on credit rather than for cash. It includes two steps. Okay, so I sold my inventory. When I sell my inventory, naturally the value of the inventory would go down by the value I sold. So I made a sale, and this actually would take down the value of the inventory by 60. What happens in front of this? Basically, when I'm selling, just like what I explained a minute ago, I am incurring cost of goods sold. And this is, or cost of sales, okay? So this is also, this could be costs of goods sold, okay? Okay, so I'm gonna just put an abbreviation of cost of goods sold, COGS, and you would recognize it. So the 60 on the left, that goes down, the minus 60 if you want, okay? The minus 60, okay, would be matched by a minus 60 here, okay? So because I sold the inventory that I have, so I sold this minus 60 and I match it with a cost of sales of minus 60. However, I sold it for 90, which means I sold it for 90 on credit. So here it's another step. So I sold it for 90. So I recorded the sales of 90, okay, a revenues or a sales. Okay. Okay, I'm not going to put anything because it jumps to, and this, because I sold it on credit, so I gave my client a facility for him or for her to repay me later. So I put it under accounts receivable. So you see how it all balances now? I have 90-90 in green, and then I have 60-60 in yellow, and then I have a -60 in blue. And this is why, okay, it all balances out. I know it's not very easy, but if you understand this example, you understood basically everything regarding double entry accounting and how it's all classified. So if anybody has a question, please don't be shy. If you didn't understand, also don't be shy. I'm ready to re-explain. So write me in the chat if it's okay, or if there's anything you'd like me to repeat. Okay, clear? Somebody else? We're 26 participants. Come on, guys. Everyone has to write a word. Okay. Okay, great. Clear, clear, clear. Perfect. Okay, you'll have these slides. I think you got the slides of last time, right? Did you?
Joanna, I have a question.
Okay.
Usually when we...
I think Joanna is on the line, but Manuel, just
sorry,
no
sorry,
worries.
sorry.
Hi. Yeah.
So when you buy on credit, usually إنه إنه بيزيد مثلا الفايدة على إنه إذا عندك تدفعيها مثلا ب10 الشهر، أو إذا ما دفعتيها ب10 الشهر بيكون عندك كذا وكذا كذا. هيدي البرسنتج ما بنحسبها هون، صح؟
لا هون we assume إنه okay, it's a good question. Sorry, what's your name?
Yumna.
Okay, Yumna is asking me about if we give credit facilities, are we charging the customer a certain interest because he's paying us in a delayed way? The answer is what you said, Yumna. In this case, we are assuming that we are not charging any interest. So if you bought something, 90, okay, and I am giving you a certain period to repay it, I just want from you the 90 that you owed me in the first place. I don't charge an additional interest on this. Is it clear?
Yes, thank you.
Okay, great. So I'll move to the next slide. So just a question, you have the slides of last time, right, guys? Or you want me to send them this time with these as well?
جوال في بتصور حدا ما فهم slides بعت على الchat, so ما بعرف if you want to take
Okay.
this.
Yeah, just I didn't get the slides. Okay, okay, I'll make sure you all get the slides of last time and this time. Okay, I'll put a note. But the rest did get the slides? Sure, guys, the rest, you got the slides? No, okay, fine, I'll check this. Okay, okay. I think they are put
Joanna sent a link on Berytech.
Exactly. I think Joanna sent a link where all the slides are there. Okay, so please check the link. I think all the resources are being put there to avoid the back and forth of email. It's more practical for you, and it's more practical for you to find them later on. Okay. Okay, I'm continuing now. So, okay, this was a quick question. Okay, thanks, Yumna. Yumna is actually sending the link where you can find everything, like all the resources on the chat box. So, guys, the ones who are saying we didn't get the slides, can you just check this link and make sure you take any slides you need? I have not sent the ones I'm presenting today yet, but I'll send them and they'll be put there as well. Okay. Okay, so we talked about the balance sheet. It's what we call usually a statement of financial position because it shows the position of the company financially. And the income statement that we talked about last time is what we call a statement of profit and loss, okay, or a statement of operations. Just for you to remember both of these, usually a balance sheet is done typically at the end of the year. So you'd always find, so there is always a date on the balance sheet. It's and the shareholders' equity of a company at a certain point in time. And it's very important to know when was this balance sheet actually constructed and what is it reflecting? Is it reflecting the financial position of the company today? Is it reflecting the financial position of the company last year? So this is very important. And second thing is a balance sheet is more like a picture. It's a snapshot. So if I take the balance sheet on December 31st, it means it's like a picture of the company's position on December 31st, okay? If I take a picture of the company, so if I construct another balance sheet on January 31st, I might get different numbers, okay? Most probably, okay? But typically balance sheets are done like yearly or quarterly in general, okay? The income statement, as we said, it shows you basically how much income the company made over a period of time. So it's not like the balance sheet at a given point. So it's not December 31st. It's from January 1 to December 31st. So it's over a period of time. The balance sheet is taken at a given point in time. And this is why the balance sheet is usually associated with a picture, so a snapshot of the company's position, and the income statement is more like a video or a recording over a certain period of time of the operations of a company, okay? So both these statements are key, the income statement and the balance sheet, and they feed into a third statement, which is actually very important and a bit difficult for some people to build, okay? But once you get the hang of it, it becomes easy. So it's the statement of cash flow, okay? And the statement of cash flows is basically, it shows you how much cash you have in the company, okay? At a given point in time, okay? And just to reconcile things, you remember on the balance sheet, so if I go back, you remember on the balance sheet under current assets called cash, okay? This amount that we have here in cash, it should always match the result of the cash statement to make sure I have built it correctly and done it in the right way. The resulting amount in cash should match the cash amount on the balance sheet, okay? So first thing is why we have a statement of cash flow. The direct explanation is because for the income statement, we have two main reasons why everything that is on the income statement is not always cash. So let me go back to the income statement. Okay, so you remember this for those who were here last time. So the first line of the income statement is revenues. Let's say I make a sale to my customers on credit. So I record on the balance sheet we just saw a few minutes ago, what we call accounts receivable, okay? So accounts receivable are basically, so if I made this sale, did I cash any money? Yes or no? If I sell you something and I tell you pay me in 3 months, I didn't cash any money, okay? But I recorded a revenue, okay? I recorded the revenue. So basically, and then assuming everything filled normally in the income statement, I get a net income. This net income is not cash. And you understand why it's not cash? Because I didn't cash the money in the very first place. But I have to build the income statement this way. I made the sale, okay? And the cash flow statement is one way, basically, to convert these revenues that I made on credit to my customers to what I need in cash, okay? So the reason
sorry بس just basically يعني what just to recap in short هذا in a short term so نحن إذا ما قبضناها يعني let's say مثلا دفعوا لنا $1000 for example but we're gonna get paid in cash let's say مثلا after 3 months we record that we got $1,000 but not in cash يعني it's like we will get the $1,000 within after 3 months but we record إنه هذا it's part of the company.
Correct, as Sarah wrote in the chat. So you have to record what we say we debit account receivable. يعني الaccounts receivable بيزيدوا بهذا الامount and you credit revenue لأنه you are adding sales on the other side of the balance sheet. Exactly. So it's exactly like what you saw here. So it's exactly what you saw here. So in this case, you are debiting accounts receivable. So increasing accounts receivable by the amount of the sale, and then putting in front of it the corresponding revenues value. But because it's account receivable, it's not cash. Okay. So this is one reason why we need a cash flow statement to understand what we have as cash. Another reason why we need a cash flow statement is, do you remember from last time I was explaining depreciation? Depreciation is, for those who are not here, and just a quick recap, what is depreciation? In case today you buy a certain asset, what we call a capital expenditure, a car for your company, a machine, something that you have to use for the product process, okay, anything that is, you know, heavy machinery, okay, so this, okay, would depreciate over time. What does it mean it would depreciate? It would basically like lose, if you want, lose part of its value every year. So because of this, okay, we do not incur the full expense during the year during which we made the purchase. So let's say I purchased a car today, okay, for my company, and this is called a capital expenditure, but this car would last for 5 years, and let's say this car is worth $5,000, and assuming what we call a straight line depreciation method, that basically means that every year I'd be incurring the same amount. So basically بقسم, I divide the cost of the asset that I acquired over 5 years. Okay, let's say this asset will live 5 years. في شيء اسمه useful life, and I explained this last time. So it's basically how much we think this asset would serve us. So typically within 5 years, in this example, I would need to change that car. So the idea of depreciation is basically splitting the expense of a big capital expenditure over 5 years, okay? But in reality, I'm actually probably paying for this asset in cash مرة واحدة. Okay, maybe I'm paying for it مرة واحدة, but on the income statement, I am splitting it in small amounts. So for this reason, we need to reconcile the cash amount. ليش؟ لأنه the depreciation would be what we call a non-cash expense. Okay. typically وقتها تشوفوا لاين اسمها depreciation على الانكم ستيتمنت ما حدا اجى ودفع من جيبته حق الديبريشيشن. الديبريشيشن بحد ذاتها ما اندفعت in cash. The cost or the cost of the asset is dispersed in cash. Yes. Okay. And now we will see it on the cash flow statement. بس هيدي فكرة depreciation. Okay. So I told you that the cash balance that you see on the balance sheet يلي هو أول سطر. So I think you can see the slide now. This is a typical balance sheet فوق. This is a typical income cash statement تحت. Do you see that last line on the slide? It's called closing cash balance. Okay, and notice that the amounts are exactly the same as the amounts in cash that we find on the balance sheet. So compare the first line of numbers with the last line of numbers, knowing that the first line of numbers is the cash line on the balance sheet, okay? And the last line of numbers is what is the result So it's the closing cash balance of the cash flow statement. They always have to match. If they don't match, it means you miscalculated something somewhere. Okay, so so I was explaining this to you now. So the difference between profit and cash. Okay, so we were saying that the calculation of profit. Okay, so quick question: where does the calculation of profit happen? Write me in the chat box. Where does the calculation of profit happen? On what financial statement we calculate profit? On income statement. Great. Okay, income statement. So the calculation, to go back here. So the calculation, excellent. So the calculation of profit sometimes take into account what we call non-cash items. So this is again what I was explaining a minute ago. I'm going to repeat it. When, for example, you make a sale that is not paid in cash, and basically you record this sale as part of accounts receivable, okay? This will be basically a non-cash item on your balance sheet, sorry, on your income statement. So if I make a sale worth $1,000 بس ما اندفع عليه cash بس بحط revenues $1,000, okay? The second thing is, let's say you actually, the second scenario يعني where there is a non-cash item involved. Let's say you have inventory, okay? اشتريته بضاعة من your supplier, okay? بس بعد ما دفعتوا له بعد ما دفعتوا له in cash, okay? So basically the cost of goods sold كمان لأنه they will be matched with accounts payable, okay? So أنا basically عم بيع شيء مثلاً، عم بيع شيء بس بعد ما دفعت حقه. As a company, I bought a stock, let's say, from China, and then I got a customer, okay? بعت هيدا الشيء cost of goods sold, بس أنا مش دافع حقه in cash, okay? So this is another case of a non-cash item. The depreciation expense is also what I just explained, a non-cash item. So all these things, like these three things, revenues and cost of goods sold and depreciation, they appear on the income statement, and they can be, okay, depreciation is non-cash, but revenues and cost of goods sold can be sometimes, if they are done on credit, okay, can be non-cash items. So in summary, what does this mean? It means that the income statement عم بيعطيني the summary of revenues and costs, بس هيدا net income at the end يلي هو either profit or loss هو رقم منه representative of my cash position. Okay, so this is why I need to build what we call a cash flow statement. So the cash flow statement, okay, فيه 3 parts. Okay, and like the calculations are a bit tricky. I prefer we go through them during the during the group coaching session. But just for you to understand the structure of the cash flow statement. So the cash flow statement فيه 3 parts. فيه شيء اسمه operating cash flow, وفيه شيء اسمه investing cash flow, وفيه شيء اسمه financing cash flow. اوكي، او لهم غير اسم، انه اسم قريب، بنقول cash flow from operations, cash flow from investing activities, و cash flow from financing activities. What does this mean? Everything I just explained to you regarding revenues, will accounts receivable, will cost of goods sold, will inventory, with depreciation, they are all related to the operations of a company. So these calculations would happen in the first part, يلي هن the operating cash flows. Okay, the second part of the cash flow statement is what we call investing cash flows. Is basically it shows you كيف تحرك الكاش when it comes to investing activities. شو يعني؟ يعني if I buy, for example, a property or a plant or an equipment or a machinery, إذا كان عندي شيء بالشركة as an asset, let's say a machine, and I sold it, okay, هيدي بتكون العكس. Okay, ليش؟ لأنه when I purchase something, it means it's a negative cash لأنه طلع الكاش من عندي. بس وقتها I sell something أنا عندي، it will be an inflow of cash into my company, so it would be a plus. Okay, any kind of investment the company does is, مثلا the company decides to invest in another business, basically this would be also classified under investing activities. Okay, anything that has to do with selling an asset or buying an asset or investing in another business or any kind of capital expenditure would fall under investing cash flows. And the third part of the cash flow statement is what we call financing cash flows. Everything related to the financing of the company. So think of financing in two ways. So think of the balance sheet. Think of either issuing shares, يعني عم كبر الكابيتال تبع الشركة، يعني think of the shareholders equity تحت، يعني the second part of the balance sheet. أو إذا بدي مثلا if I get a debt بروح بستعير مصاري من البنك. Okay, I get a loan, I get a debt. So this falls under financing cash flow. So just to give you a quick example, if I get a loan, it would be put under financing cash flows as a positive cash. ليش؟ لأنه فات الكاش على البزنس تبعي. إذا مثلا you have a loan or you have a debt that you are repaying, okay, you need to put it as a minus in financing activities لأنه بتكونوا عم ترجعوا تدفعوا هيدا الdebt, so it's a minus in cash. Okay, anything you see on the income statement, on the cash flow statement, okay, له علاقة بالكاش تبع your business. Okay, clear till now? Does anyone have any question on this slide? Okay, I have two people. merci. حدا قال لي صح. Any question on this? Or it's clear? كفي؟ Okay, so let me tell you briefly how this happens in reality while building a cash flow statement. I did not get any Excel sheet for now. I thought this is like the second introductory session. ما بدي أعجق لكم راسكم. If you understand already a cash flow statement is a statement that gets us at the end the cash position of a company that is actually the same cash number that we see on the balance sheet, and that the cash flow statement has three main parts اللي هن operating cash flows, investing cash flows, financing cash flows. It's already enough for now. Okay, but just to give you a high level idea of how this is done. Regarding investing and financing cash flows, it's very straightforward. So إذا بنشتري شيء بالinvesting activities عم بحكي investing cash flow. If I buy something, I buy a piece of equipment, a piece of machinery, an asset or anything, it's a minus this amount. So if you want, I can show you an example هيك on Excel so that you have an idea of how this translates in reality, so that ما تبقى الفكرة very theoretical for you. Okay. Can you see, or it's too big or too little or like too small?
I guess. أنا عم نشوف ما عم نشوف الإكسل بعد.
ما نشوف الإكسل. Okay, لأن sharing. Okay, let me share the Excel. Okay, can you see the Excel? Okay, great. So this is a statement of cash flow for a company. It doesn't matter what the company does. I just want you to see the structure. It's small. Okay. Okay. I'm just going to explain it very quickly, and then I'll find another way to have something bigger for you during the group coaching session. So the idea here is that this is a statement of cash flows. It's split in three parts. This is the first part. The first part is cash flows from operating activities. How do we build the cash flows provided by operating activities? We always start with net income. The starting point of this part is net income. And then we make certain adjustments to it. So depreciation, do you think we add it to net income or we deduct it from net income? So remember, I have a figure of net income and I want to get to cash. The objective is I want to translate everything to cash. If I have a certain net income, do I have to add to it depreciation or deduct from it depreciation? No, not deduct. Not deduct. The idea is the following. Okay. On the income statement, I have deducted depreciation as an expense and I got net income as a result. Now I want to do the opposite. Why? Because the depreciation was never paid in cash. And why I want to go back from net income to cash. This is why I start with net income, and whatever is non-cash expense, okay, like depreciation, or if I have in another case amortization, I have to add it to net income. Do you understand why I'm adding depreciation as a first step? Because it's a non-cash expense. It's an expense that I recorded on the income statement بس ما بحياتي دفعتها in cash. So أنا فكرتي إنه I want to start with my net income and I want to reach an amount that is actually what I have in cash. So I start with net income and add depreciation. Is it clear? This is the first step. The second step, okay, the second step has to do with what we call the elements of working capital. يلي هن accounts receivable, inventory, and payables. So إذا accounts receivable زادوا من سنة لسنة, okay, should I deduct that amount, the difference, or should I add it? Remember, accounts receivable يعني العالم ما دفعوا لي. Let's say I had year 1 account receivable of 100, and then in year 2 I had accounts receivable of 500. It means that I have 400 additional ما اندفعوا لي. So is this a plus or a minus to my cash? Yes, excellent. It's a minus, Rabia. Bravo. So لأنه زادوا accounts receivable, remember accounts receivable are what you sold to your customers بس ما قبضتوهم كاش. لأنه ما قبضتوه يعني إذا عم بيزيد هيدا الأماونت يلي ما عم بقبضه كاش يعني I have to deduct that increase from my net income to reach my cash. Okay. The opposite when it comes to accountable. يعني إذا أنا كان لازم السبلاير تبعي $100 والسنة اللي بعدها لازم ادفع له $1000 يعني في $900 زيادة لازم ادفع له إياهم. So is this a plus to my cash or a minus to my cash? يعني أنا عندي أكتر أو عندي كاش أقل؟ It means I have more cash. My accounts payable have increased. So it's like my debt to the other supplier. Yes, Rabia, أنا معك. So my debt to my supplier has increased. So أنا علي مصاري أكتر لازم أدفع له إياهم. But today قبل ما أدفع له إياهم, okay, I have more cash. So is the depreciation the value of the product after it lost part of its value or the amount of loss? So the depreciation is the amount that was lost in value. It's not the value of the product after it lost part of its value. Okay, يعني إذا أنت اشتريت سيارة حسن أو حسان I'm not sure. So إذا أنت اليوم اشتريت سيارة حقها $20,000 okay وصري هيدي السيارة صارت قيمتها تنقول $12,000 depreciation is 8,000 it's not the 12,000. Okay, great. So you understood what we do with receivables and payables. Inventory is the same. So if my inventories have increased in value, okay, يعني يعني أنا ما بعتهم كفاية. So it's less. I have to deduct that amount from my cash. Okay, so هيدول بينعملوا automatically on a financial model. Don't worry about these things, but I'm explaining this to you for you to understand the rationale. Okay, the rationale of why do we add or why do we deduct. So what I want you to remember is that غير إنه اللي حكينا فيهم قبل هلا statement of cash flows فيه 3 parts: cash provided by operating activities, cash provided or net cash activities, cash provided by financing activities. Okay, bill operating activities I always start with net income, then I add to it any non-cash expense, be it depreciation or amortization, Then for receivables and inventories and payables, I do kind of an adjustment, okay? إذا receivables مثلا زادوا, it means that I have less cash, okay? Because I sold on credit. If my payables have increased, it means I have more cash because I was given a credit facility, so the cash is more in my hands, okay? And I add up these adjustments, okay? And I add them to the net income, and this would give me basically the cash provided by operating activities. For the cash and investing activities, just think of whether the company has acquired any asset. Okay, if it acquired an asset, it's a cash outflow, so it means it's a minus. إذا أنا اشتريت سيارة, it's minus $20,000. Okay, and if, for example, the company has an asset that it sold, okay, let's say the company has شو عرفنا a company car بدها تتخلص منها تبيعها, okay, بعتها بحق تنقول شو ما كان $7,000. This is a cash inflow in the company, so it would appear as a line. هون ما عندي this line. In this Excel, I have only one line, which is an investment in fixed assets. An investment in fixed assets يعني capital expenditures, يعني basically أنا دفعت مصاري as a company, so it's a minus. It's always a minus. مشان هيك بتشوفوا ال amounts into parentheses. بس إذا for example أنا as a company I sold an asset that I have, so this would be another line here. It would be a sale of an asset وبيكون positive cash, يعني لأنه cash عم بيفوت على الشركة تبعي. Okay. Third part of it is what we call cash flow from financing activities. Financing activities يعني إذا أنتوا حطيتوا مثلاً أول سنة رح تحطوا capital بالشركة، بتكون تسجلوا الشركة. إذا حطيتوا مثلاً إذا بتكون تعملوا بلبنان يلي بيسموها شين ميم لام، أوكي، أو شين ميم ميم ما بعرف شو اسمها، يعني SAL، هي $20,000 الكابيتال تبعها. سو كأنه فوتوا $20,000 على شركتكم كاش. So that's why it's a plus minus. إذا مثلا تتذكروا كنا عم نحكي قبل شوي وآخر مرة عن dividends. Dividends are basically the part of net income that you decide to distribute. Paying dividends, distributing dividends is always a negative amount. Okay, يعني you disperse it. Okay. So this is grosso modo, and we have these three parts. We add them up, okay? We add them up, and this would give us the changes in cash. إذا بزيد الcash provided by operating activities, والcash provided by investing activities, والcash provided by financing activities, كلهم هيدول they are changes. So the result is a change in cash position. إذا كانت الشركة بعدها مبلشة let's say وما في cash أول شيء، برجع بزيد هيدا الاماونت على الكاش at the beginning of the year, okay, to get the cash at the end of the year. Okay, so this is it as far as the cash flow statement is concerned. It's the most complicated, I know. Do you have any questions? We still have like maybe we started at 3:15, I guess, so رح نكفي على 4:40 أو 4:45. Do you have questions on this? Yes, of course you can unmute yourself. Please, please unmute yourself and ask any question.
Hi.
Hi Sarah.
بدي أسأل على أول بختي ال operating activities. نحن هون عم نقول إنه the change in these values will translate to a change in cash. ما هيك؟
مظبوط. Right. Yes. Okay. Correct.
بس لأنه يعني وقت أعطيت الإكزامبل تاع الأكاونت receivable، يعني إذا أنا عندي أكتر account receivable it would eventually translate to a decrease in cash، بس مش يعني دغري it's equal. ما هيك؟
So the idea is the following: if my accounts receivable say increase from year 1 to year 2 by say $500, it means my cash is changing but is actually decreasing by $500 between these two dates, in that year.
Okay.
Is it clear?
ما كتير.
Okay, let me clarify this. So in year 1, okay, we are not comparing previous year. We are only taking the position of year 1. But when we go to year 2, it's always the difference between year 2 and year 1. Is that so? In the case of receivables, please Sarah unmute yourself.
Yes, I'm unmuted بس راح شوي الكونكشن.
Sorry. Okay, so what I'm saying is that مثلا in year one, okay, the changes in receivables actually the exact amount of receivables لأنه I cannot compare to year 1 to any year before it. As if I am saying that because I have this amount of receivables in year 1, it means that this amount of receivables is actually a deduction to my cash.
اوكي انا فهمت انه change in receivable يعني اذا نقل الريسيفبل تبعي معناتها زاد الكاش.
اذا قل it's exactly this. yes مثل ما قلتيها، اذا قل الريسيفبلز يعني زاد الكاش، واذا زاد الريسيفبلز يعني خف الكاش.
انا هيدي الثاني بختي ما عم تزبط معي، انه اذا زاد الريسيفبل ليه بده يخف الكاش؟
اوكي زاد الريسيفبل يعني انا بعت on credit اكثر. اوكي يعني in terms اذا بروح اوكي زاد الريسيفبل do you agree that زاد الريسيفبل يعني زادوا السيلز؟
true مزبوط.
اوكي زادوا تبعي يعني على الانكم ستيتمنت كل الارقام عليت، زادوا السيلز سو على النت انكم.
صح.
اوكي بس انا بعت اون كريدت يعني عم بيع اكونت ريسيفبل، يعني ام ريكوردينج اكونت ريسيفبل، سو تارجع للكاش لانه زادوا الاكونت ريسيفبل بدي اخذ هيدا النت انكم وارجع شيل منه هيدا الفرق ان اوصل للكاش. يعني بيسكلي ام تيلينج يو اذا انا بعت كل العالم واعطيتهم كريدت فاسيلتيز اخذوا البضاعه وراحوا على بيتهم، انا لقيت حالي ما معي ليره لانه اعطيتهم كريدت فاسيلتيز. So in terms of cash as a startup, your accounts receivable increased, your sales increased, your customers took their products and went home, but you are in your shop and you have no cash.
اوكي هلا فهمت. thank you.
هلا وضحت؟ اوكي great.
Yes.
Great.
Sorry.
Yes, sure.
بس بقدر على طول بس شوف الكاش فلو ستيتمنت بتذكر انه معلش اذا فينا نسمي نعطي اكزامبل الشركتيه هون كيف بيشتغل. فتح كذا فرع مع بعضه. ليش؟ لانه ما عنده ريسيفبلز، بالعكس عم بيقبض كاش وعنده بايبلز عاليين، فصار كوست السوبر ماركت تبعه وكل الاراضي اللي اخذها هي اجار من الديورة، فالكوست تبعه هي العمار بس بقى كله عم بياخده على 6 اشهر. الكاش فلو عنده ستيتمنت على طول بوزيتيف. لو كان عم بيخسر فرعه الكاش فلو بوزيتيف لانه عم يدفع بعد 6 و7 اشهر للسبلايرز وعم بيقبض كاش من العالم.
فهمت.
فهيدي خلته يفتح، صار يقولوا انه كيف بيفتح 10 فروع مثلا حد بعضهم، لانه ما عنده مشكله لانه عم بيقبض كاش ويدفع بعدين، فعم بيعمل مصلحه من مصريات الناس. لا والله هيدي كلها على الكاش فلو ستيتمنت. يعني
ليك معقوله؟ للحقيقه انا ما كنت عارفه هيدا الشيء، يعني انا ما بحياتي شفت الفاينانشال ستيتمنتس تبع ولا شركه يعون ولا غير سوبر ماركت، واتس انترستينج. واكيد نحن ما عم نوجه ولا
لا ابدا بس عم بقول انه السوبر ماركتس لانه بياخروا بالدفع بيقبضوا كاش كثير بتفرق معهم. يعني اوقات 1 داي بياخروا البيبلز تبعهم بيعملوا مليون ومليونين وارقام. يعني
مزبوط you have a point صراحه. what you're saying is very correct لانه السوبر ماركت sorry what's your name؟ ربيع. so السوبر ماركت مثل ما عم بتقول بتدفع له كاش، so ما عنده ريسيفبلز. اذا كان عنده جود تيرمز مع السبلايرز تبعه يعني عنده البايبلز عاليين، يعني عم بيأخر دفعاته للسبلايرز، وهو مصرياته عم بيجوا دغري من الكاستمرز تبعه اون ذا سبوت، كل ما عم تشتري بضاعه عم تدفع له. اوكي سو ذس از واي اذا كانوا هدول اثنين فورسز مثل ما انت عم تحكي، يعني كانه الريسيفبلز واطيين والبيبلز عاليين، بيكون الكاش provided by operating activities عالي، وبهيدا الكاش بيقدروا يعملوا ماينس بالinvesting activity so they can invest in properties and other outlets ويضلوا الكاش بوزيشن اخر شيء بوزيتيف.
صح، هذا اللي عم جرب اقوله اذا بدك. صح.
ايه انا فهمت عليك. اوكي جايز، interesting intervention from our colleague، بس بليز خلينا ننسى الاسامي.
ايه اوكي، لا هي مش قصه اسم كلهم هيك.
لا
كلهم هيك.
لا انا ايه ما هيك هن كلهم هيك، مش هيك خلينا نقول كلهم.
اوكي.
سوري.
يس.
هاي. بالنسبه للكابيتال انجكشن،
يس
نحن حطينا انه خبرتنا انه عم سجل شركه او شيء، فاذا عم سجل انا بضل معي كاش، فكيف بدي زيده؟
لا، ما هو بيسكلي فكر فيها انه هو كاش معك وحطيته بالشركه. سو عم نحكي عن قد ايه فات او طلع كاش على الشركه. سو اذا انت حطيت ال20,000 تبعك بالشركه وقدرت سجلت شركه، يعني اتس ان انفلو اوف كاش انتو ذا كومباني. بدك تاخذها من ميله الشركه، انت عم تاخذها من ميلتك، يعني عم تشوف انه طلع من جيبتك $20,000 كانسان. إيه انا معك. ما هي الحياة كلها هيك، يعني وبيطلع شيء من ميل بيطلع بيروح بيفوت ثاني ميل. بقى هون الفكرة انه انت شلتهم من جيبتك على راسي، بس حطيناهم كابيتال انجكشن بقلب الشركة. سو اذا عم نفكر بمصلحة الشركة it was a cash inflow so that's why it's plus.
اوكي، يعني لما بتنباع الشركة او شيء هن رح يكونوا محسوبين معها او هاي؟
انه وقت بدها تنباع الشركه اكيد انه بينعمل يعني كيف بدي اقول لك، تقدر تنباع الشركه بدها تكون شركه، اوكي، وانت هون بهال20,000 يلي عم بتفوتهم عم تعملها شركه. سو ايفنشلي وقت ترجع تبيع الشركه هوبفلي بسعر اعلى بكثير، بيكون هدول ال20,000 مثل انه فادوا. عرفت شو قصدي؟ انه خلوك to value the company at what it would be.
اوكي thank you.
You're welcome.
بس عندي سؤال.
يس
حسن،
حسن.
بالنسبة للستيتمنت اوف كاش فلوز في بالسكند رو اللي هو الانفستنج، كنت عم بتقول الانفست it's the same result انه كمان تبيعي asset، بس ما انت when you invest you are spending money، ولما تبيعي asset you are receiving money. ليش هن بنفس الرو؟
هن منهم بنفس الرو. سوري I meant إذا بدك if you want to sell an asset and you are receiving money you have to create another row وبيكون الاماونت فيها positive لأنه it's a cash inflow. هون يلي شايفينه على سكرين عندي، ما بعرف بعدكم شايفين الإكسل؟
اوكي، بس هو to invest هي outflow، ما هيك؟
هي اسمها investing activities، بس it includes anything you would invest in or anything you would get or any investment you would get rid of which would actually translate into a cash inflow into your business.
اوكي.
عرفت شو قصدي؟ أنا فهمت عليك، أنت عم بتقلي إنه investing لازم كله يكون outflow ولازم كله يكون negative.
صح.
إيه لا مش هيك، هي basically it's a category of activities يلي إلهم علاقة بالinvestment، اوكي، بس إنه بتقدر أنت تكون عم تتخلص من investment عندك إياه، وبasically بيكون it's translating into a cash inflow into your business.
اوكي فهمت عليك.
اوكي.
ميرسي.
Sure, you're welcome. Any other question guys قبل ما كفي؟ We still have like 10-15 minutes. I'm gonna go high level into the basics of building a financial model. Hopefully we'll schedule a third session to go into a bit more details خاصة بالfinancial model. Okay, no question. Okay, no question. رح كفي لك أنا. I'm just going to go back to the PowerPoint. Okay. So okay. عنا ثلاثة أشياء like for those of you who are not familiar at all with the financial model. The financial model هو كناية عن Excel file. Okay. بنحط فيه certain numbers. Okay, and they allow us to have a visibility on how the company would behave. عم نحكي mainly financial statements يعني. يعني بنحط so as this slide shows you have certain inputs. الانبوتس هن assumptions انتم بتحطون. اوكي يعني مثلا انا I'm going to sell X numbers of items in year 1, X number in year 2, X number in year 3, X number in year 4, X number in year 5. بتقدروا you can make a certain assumption خاصة بالgrowth rate. مثلا بدي انه انه الريفينيوز تبعي يكبروا 10%. يعني بالانبوتس بتحطوا كل شيء انتم عم تفترضوه، انه تنفترض انه رح نزيد هالقد او رح نكبر هالقد او رح نبيع هالقد. اوكي والانبوتس بيقدروا انه الانبوتس متعلقين they are actually related to every item of your business. يعني بيقدروا يكونوا متعلقين بقد رح بيع كايتمز، بيقدروا يكونوا متعلقين بالبرايس يلي رح بيع فيه، بيقدروا يكونوا متعلقين بشو هن الاكسبنسز categories that I'm going to be incurring. يعني anything that you need basically decide upon. انتو تقولوا انه هيدا الرقم تنفترض هالقد، هيدا بنسميه inputs. و a good financial model in terms of best practices دايما بيكون فيه هول الثلاثه، اذا بدكم ثلاثه parts ideally اذا بيقدروا يكونوا on 3 different sheets او حتى يعني مثلا الاوتبوتس يعني اذا بيقدروا يكونوا كل اوتبوت على شيت. اوكي يعني الاوتبوت يعني بيكون الانكم ستيتمنت لحاله، البالانس شيت لحاله، الكاش فلو ستيتمنت لحاله. اوكي بس الشيء المهم انه الانبوتس يكونوا لحالهم. ليش؟ لانه اذا حدا عم بيطلع على الفاينانشال موديل تبعكم يطلع انتم شو حطيتوا كاسامبشنز، يعني شو افترضتوا رح تبيعوا قديش اول سنه، قديش ثاني سنه، قديش ثالث سنه. اوكي البروسيسنج اللي هي الثاني بارت هو بيكون شيت على اكسل وين بنستعمل كل شيء حطيناه بالانبوتس تنعمل certain calculations. يعني ابسط شغله فيني اقول لكم اياها، اذا مثلا بالانبوتس I have one line حطيت فيها قديش بدي بيع كل سنه in terms of quantities، وعندي لاين ثاني بتقول قد ايه البرايس at which I would sell every year. بالبروسيسنج بكون عم بعمل المالتيبليكيشن مثلا of price times quantity تعرف قد ايه الريفينيو. اوكي واخر شيء يعني بالاوتبوت بكون عم باخذ من البروسيسنج شيت كل شيء عايزته حتى اكون عم بركب هالانكم ستيتمنت، البالانس شيت والكاش فلو ستيتمنت. هلا اجمالا كرمال الاوتبوت اول شيء بيتركب الانكم ستيتمنت، من بعده البالانس شيت، ومن بعده الكاش فلو ستيتمنت. اجمالا بيجوا بهيدا الاوردر، انه مش اجمالا هن هيك بيجوا، لانه بعوز شو حطيت بالانكم ستيتمنت حتى ابني الكاش فلو ستيتمنت، وبعوز شو بدي ابني بالبالانس شيت حتى ابني الكاش فلو ستيتمنت. سو الكاش فلو ستيتمنت اذا بدكم هو عايز الاثنين يلي قبله. اوكي سو هيدي القصه. هلا بخصوص الانبوتس، اوكي بخصوص الانبوتس شو بيفرق جود موديل اذا عم نحكي ستراكشر. اذا ليتس سي انتم بنيتوا كلكم بنيتوا فاينانشال موديل مع انبوتس ومع بروسيسنج او كالكوليشن شيت، شو بيفرق a good model عن an average or a bad model؟ هو basically قديش الانبوتس they are accurate، يعني قد ايه عملتوا ريسيرش حطيتوا هول الانبوتس، قد ايه جبتوا الماركت، قد ايه جبتون من ريبورتس فتشتوا عليهم. اذا مثلا الارقام مثلا عم بتجيبون من ريبورت خاصه بلبنان، اذا عم بتجيبون من if you are actually using realistic figures. So يعني the quality of the inputs you input, the quality of the inputs that you use will determine to a large extent the quality of the financial model. Another thing كتير best practice يعني بنعتبرها بالinputs هي انه على الشيت الانبوتس اوكي كل شيء بدي استعمله وكل شيء قررت استعمله بحطه as a line لحاله. اوكي يعني البرايس بيكون لاين لحاله. اذا مثلا بدي اعمل، اذا عندي لنقول اعطي اكزامبل monthly revenue، اوكي وحطيت انا المونثلي ريفينيو كسطر لحاله، وبدي اروح على سطر ثاني اعمله yearly revenue. اوكي شو لازم اعمل بين المونثلي واليرلي؟ I have to multiply let's say by 12. اوكي assuming انه we're doing the same thing كل شهور السنه. so بحط سطر بسميه number of months in a year وبحط فيه 12. ما بحط البرودكت، يعني ما بحط 12 بقلب الاكسل سيل. لانه اذا حطيتها بصير موديل معقد، بصير بده واحد اذا عم بيطلع عليه بده يفتش وين انت فوتت غير رقم، او اذا بده يغير شيء بتصير كثير صعبه. فكره الفاينانشال موديل هي انه تسمح لحدا اول شيء يطلع على الموديل، يفهم كيف هيدا الموديل مبني. ثاني شيء اذا بده يغير اشياء في شيء اسمه sensitivity analysis، يعني let's say انا بدي اغير هيدا الموديل لانه بدي ازيد البرايس او بدي وطي البرايس او بدي ازيد الفوليوم او وطي الفوليوم، يكونوا الاشياء اللي بدي اغيرهم محطوطين بشيت واحد. الاشياء اللي بقدر غيرهم these are the drivers. بقدر غير الاسعار، بقدر غير النمبر of customers، بقدر غير النمبر of it depends on every model. بس the idea is that every input تكونوا حاطينه على سطر لحاله، and if this input is a result of several inputs مثلا a sum or a multiplication او شيء، بتحطون كل واحد لحاله and then on the processing sheet بتعملوا المultiplication او السم او يلي هي. اوكي by referencing the Excel cells، مش انه بتحطوا بقلب السل الرقم. اوكي we're going to do this in practice. يعني صراحه I don't know how this is going to be how easy this is going to be done online, but I'm gonna try my best يعني to show you next time how this is done. Okay يعني just to give you an example, I'll not give you an example now. خلينا ماشيين بالهيدا. So this is regarding the inputs. Regarding so the idea here is to clearly separate inputs from processing and outputs. كل ما قدرتوا تعملوا هالسيبريشن بين هول الثري بارت، كل ما كان الفاينانشال موديل تبعكم روبست اكثر وكريديبل ويعني اذا بدكم best in class. اوكي بالبروسيسنج دائما البروسيسنج هو بيسكلي عم بستعمل الانبوتس يلي حطيتون to do certain calculations. يعني احيان اكزامبل عم بعطيك مثلا حطيت بالانبوتس انه برايس هو شيء وكوانتيتي هي شيء ثاني، بالبروسيسنج بكون عم بعمل المالتيبليكيشن اوف هول الرقمين to get the revenues. اوكي كل شيء complicated you need to break it down. يعني if a certain calculation بتعوز several steps، اعملوا كل step لحالها حتى اذا حدا عم يطلع على الاكسل موديل يعرف كيف وصلتوا للريزلتس. اوكي ودائما اوكي calculate the final figures on the processing sheets. يعني مثلا اذا بالانكم ستيتمنت انا بدي اول سطر هو revenues، خلي الريفينيوز يكون معمول calculation على البروسيسنج شيت، وبالانكم ستيتمنت I will just put equal to هيدا الشيء اللي انا عملت له calculation. يعني I just reference the cell. If you are familiar with Excel, I reference the cell بحط equal and then I go to the processing sheet, I click on the cell يلي بدي اياها تبين الفاليو تبعها and I click enter. Okay هلا for those who don't know, Excel is really easy to use. يعني if for example you have values حد بعضهم in columns and you are just referencing the first value and you drag the cell to the right بتاخد الفاليوز يلي حدها. اوكي so voilà. الفكره انه بالاوتبوتس يعني كل شيء بيكون ريزلت كانكم ستيتمنت كبالانس شيت كهيك بيكونوا linked to the processing sheet. اوكي بيكون كل الكالكوليشنز انعملوا على البروسيسنج شيت. اوكي so مثل ما قلت لكم it's a three step approach. بنبلش دائما بالانكم ستيتمنت، بعدين البالانس شيت، وبعدين الكاش فلو ستيتمنت. هلا كيف من الوقت I still have like 5 minutes. So one of the first things you have to start working on in the financial model هو الريفينيوز تبعكم. اوكي so بدنا نعمل estimation للريفينيوز. اوكي وبدنا نعمل estimation للكوست. هدول هن واحده من يعني اول شغلتين بنعملهم. ليش؟ لانه وقت نعمل الاستيميشن تبع الريفينيوز والفوركاستنج والاستيميشن تبع الكوست والفوركاستنج تبعهم، بقدر اخذ هدول الريزلتس وبقدر احطهم على بقدر احطهم على اوكي سو شو هن ستيبس تو فوركاست ريفينيوز؟ قلنا مثل هذيك المره بدنا نقرر شو هن الريفينيو ستريمز تبعنا. اوكي وات ام اي سيلينج؟ ام اي سيلينج ا برودكت سيرفيس؟ ام اي سيلينج ا subscription? am I selling ما بعرف ads? am I selling I have to decide what am I selling حتى اعرف اوكي على شو انا بدي اعمل يعني forecasting. Am I forecasting the number of subscriptions؟ لأنه إذا عم بعمل forecasting لبزنس revenues لبزنس ماشي على subscription model، بدي أعرف تقريبا the number of subscribers وبدي أعمل multiplication لهيدا number of subscribers مثلا ب the average subscription amount. أوكي، غير إنه إذا عم بيع product بدي أعرف تقريبا كم product بدي بيع. يمكن مثلا كل عائلة بتشتري 4 products مثلا. It depends on every case. بس مشان هيك بدنا نفهم نحن شو عم نبيع لحتى نعرف نعمل estimation للvariables يلي بيخلونا to come to the calculation of revenues. Okay, so تهين لكم regardless of what your company does, you have to forecast the revenues 2 things: the price and the volume. Okay, يعني بدي أعرف أنا actually the volume and the price. بدي أعرف أنا قد إيه عم بيع. Then I have to estimate the volume, and then I have to decide on the price, and then I would be forecasting revenues. Okay, هيدي فكرة الاستيميشن تبع revenues. للcosts okay للcost في 2 parts مثل ما حكينا هيدي مرة. بفكر بالvariable cost يلي هن الcost of goods sold، يعني أنا كل ما بيع product شو هو الدايركت كوست تبعه. يعني إذا أنا عم بيع product عم بكلفني تصنعه شيء، اوكي this is a cost I have to forecast، وهذا الشيء بده يوقع under cost. اوكي، وعندي another category of costs يلي هي الفيكست costs. fixed costs يعني بنسميهم operating costs. بدي شو هن هدول الكوست. I have first to list them. يعني think of rent, think of utilities, sales and marketing expenses, accounting, legal, إذا في شيء technology, maintenance, it doesn't matter. يعني بدي I have to list these costs and then I have to estimate قديش I'll be incurring every year. Okay, so هولي يعني basically the 2 main things ببلش فكر فيهم حتى ابني ال income statement تبعي. so هون costs حط لكم between parentheses variable plus fixed. Okay, so this is as far as this is concerned. هلا للrevenues اوكي للrevenue forecasting للforecasting revenue مثل ما قلت لكم it's quantity times price. There are 2 forecasting approaches. اوكي، يعني كيف بدي اعمل يعني واثنيناتهم كثير مهمين واثنينات تستعملون بس you always sorry بعدكم عم تسمعوني it just cut for a second لانه my earphone طلعت من الكمبيوتر. Can you hear me guys? Okay, great. So to forecast revenues, you have basically 2 approaches, and they are not, I mean, they are different, but it's important to do both, and I'll explain both. So when I say, these approaches are bottom up and top down. شو يعني bottom up وشو يعني top down? إذا أنا I'm starting a business and I'm thinking of how much I can sell, okay, in revenues. مثلا I have 1 salesperson وهيدا الشخص بيقدر تنقول يبيع تنقول 3 products per week, which means 12 products per month. يعني إذا عم بلش من الكاباسيتي تبعي as a company قديش أنا قادرة أبيع، قادرة أروح شوف 20 كلاينت، من هول ال20 probably في 5 رح يكونوا interested ومن هال5 رح يبقى تنقول 3 يشتروا مني. إذا بفكر بهيدا الانجل بكون عم بعمل what we call a bottom up approach. Okay, يعني any kind of calculation that starts with what I'm able to do as a company is what we call bottom up. Bottom لأنه we start from where we are و up لأنه بنوصل للريزلت. التوب داون هي أكتر بتكون إجمالاً studies مثلاً الماركت is a market of X thousands وأنا I want to take a 1% of that market during year 1. So basically let's say the market فيه تنقول 100,000 customers و 100,000 potential users وأنا بدي أخذ 1% of this market, so أنا عم باخذ basically 1,000 users in the first year وبدي شرج every user تنقول $50, so my revenue for the first year is 1,000 times 50 which is $50,000. رح تلاحظوا إنه إجمالاً البوتوم أب تعطيكم رقم أصغر بكتير من التوب داون. وليش مهمين اثنيناتهم نعملون؟ مهمين اثنيناتهم نعملون لأنه البوتوم أب تعطيكم فكرة عن قديش أنتو الليميتيشن تبعكم from an operational point of view. والtop down is almost like, is always basically kind of a vision or, it gives you an idea of the potential of your market, of your business idea. It's important to do both and then to try to reconcile them. And you will never be able to reconcile them 100%, بس مهم إنه يتقربوا على بعضهم هول الريزلتس تبع الاثنين. أوكي؟ يعني كيف بدي أقربهم على بعضهم؟ إذا عملت أنا bottom up approach وطلع لي إنه أنا I'm selling أول تنقول $100,000 وبالtop down approach طلع لي إنه عم بيع أول سنة $500,000. طيب يمكن أنا لازم صغر الأماونت تبع الماركت شير يلي I assumed it in the top down by 5. يعني إذا أنا مفكر بدي آخذ 5% of market, maybe I just need to take 1%. And this would bring it closer to the bottom up approach. So هون أعطي example أنا إنه let's say a refinery business, okay? In the bottom up approach, how do we calculate it? الريفينيو تبعي هو قد ايه الكاباسيتي تبع البلانت تبعي by the number of plants يلي أنا عندي إياها, by the average utilization قد ايه أنا بشغلهم 50%, شغلهم 20%, times قد ايه رح بيع كل يونت. So شفتوا كيف بلشت بالكاباسيتي تبعي أنا, my installed capacity per plant versus a top-down approach where لنفس البزنس refinery business بتطلع على قديش مثلا consumption per vehicle in the whole region times قد عندي vehicles times قد انا بدي اخذ market share in the region times ساعتها اخر شيء نفس الشيء average price per unit of sale. So you see how the approach, the forecasting approach is different. Basically what is different إذا بدكم بالforecasting revenue بين البottom up والtop down. إذا عم تطلعوا هون عندنا revenue equals quantity times price. Price ما بيتغير. بس once I'm forecasting quantity, إذا ببلش بماي capacity وبشوف أنا شو هن my limitations, بكون عم بعمل what we call a bottom up forecasting approach. وإذا بكون عم بعمل هالquantity عم بلش بالsize of the market وعم I'm going down, عم صغر بالmarket share يلي أنا بدي أخذه, بكون عم بعمل basically a top down forecasting revenue approach. Okay, so this is as far as revenue is concerned. للcost مثل ما قلت لكم easier forecast than revenues لأنه الcost بتعرفوا أكتر إنه what you will need to incur. Revenues أكتر في هال unknown factor that comes with how much demand can I generate, قد رح يجي customers, what would be a safe number to assume in terms of market share. Okay, so تهينكم إياها للcosts قلنا إنه costs are اتفقنا they're easier to forecast than revenues. So بدنا نقسمهم بين two parts, fixed costs و variable costs. الvariable قلنا هن cost of goods sold, يعني قد ايه بتكلفني كل شغلة ببيعها. اوكي, والfixed هن they don't fluctuate with the activity level, يعني عم نحكي rent, عم نحكي salaries, عم نحكي sales and marketing, وبنعرفهم usually ahead of time. Okay, so هيدي as far as costs are concerned. So this was just to give you a high level idea about what are the basics of building a financial model. Hopefully next time I'll give you a deeper explanation of how to go about it step by step, what are the variables to enter. And I will be sending you, after the session we do next time, a template that you can use, you can start using to build your own financial model. Okay, I think I'm already past the limit of time. Do you have any questions, guys? How was it? Any questions? ما بعرف. You're welcome, guys. Always a pleasure. So I'll coordinate with Joanna and try to see if we have a third session. I think it's very, very much needed. Okay, طيب guys, be safe in these exceptional times. Take care of yourselves and talk to you soon. Have a great afternoon.